Hello friends, in this video I will try to explain the various forecasting technique of working capital and what is the procedure of try to elaborate what is the procedure of computing the working capital and why you students are in second sem, so you have to understand that though you don't have an examination, but this working capital subject is whole subject in third sem, so that's why you have to study this working capital very properly and very, and you have to understand the subject very. So what is the forecasting technique of working capital? So there are various popular methods for forecasting the working capital requirements, which are as maybe first, that is a cash forecasting method, balance sheet method, profit and loss adjustment method, percentage of sales method, operating cycle method, and estimation of current assets components. So these are the basically six. Probably you find these methods in various reference books. Uh, so let us check one by one. So what is the cash forecasting method? Under this method, the working capital is to be determined on the basis of the closing balance of cash after considering the receipt and payment made during the period. So this is basically for very small scale level of businesses, very small micro level of businesses, where the transactions are not very huge. So there you can find this cash forecasting method on a historical data. Second, there is balance sheet method. According to this method, a forecast is made on the various assets and liabilities of the concern. Right? You have to identify the concern assets and liability. On that basis, on the balance sheet method, in the balance sheet method, you have to identify the working capital. The difference between two is taken, which indicate either cash surplus or cash deficiency. So what components of assets, what component of liabilities you have to check, that will be depend on the company. But that is corely basic from the balance sheet. Then there is a third method. There is a that is called as P&L adjustment method. Under this method, the forecasted profit and losses are to be adjusted on each basis, right? On each component basis. So this is not very popular method uh, in the forecasting technique of working capital. Then there is a percentage of sales method. You can see here on the fourth number. Under this method, working capital is determined as a percentage of forecasted sales. Right now, this is a very old technique, and for huge companies, for large scale businesses, even for medium scale businesses, this is not possible nowadays to just identify the working capital on the basis of percentage of sales method, because there are various components determine the working capital right now. But in this method, it will be decided on the basis of past observations. What is your past observation of last 5 years, last 10 years? So that can be uh, that is that is done in this percentage of sales method. This method is simple and easy to understand. You have to check the sales ratio, and what is the working capital required in that phase. That is the only concept in this percentage of sales method. Then there is a operating cycle method, right? Under this method, working capital is determined according to operating cycle concept. What is the operating cycles? That means you have to put some cash in your business. That cash will be converted in a raw material. That raw material will convert it in a working capital. Sorry, working process that will convert in a finished goods. That will convert in a again cash receivables, and that receivables will convert into cash. That is a cycle, cash to cash cycle. So in a manufacturing organizations, the working capital cycle starts from purchase of raw material and ends with a conversion of cash. So it involves purchase of raw material, work in progress, finished goods, sales, debtors, conversion of cash. The cash will continue again and again, right? This is the day-to-day basis, right? Each of the cycle stage is expressed in term of number of days that operating cycle will have to express in a days. For example, if you have to purchase a raw material, that will take 2 days. Raw material will convert in a working process in 3 days. Working process convert in a finished goods in 1 day. Finished goods will convert in a sales in 10 days, and that sale of goods will convert in a cash in again 10 days. So that is approximately 30 days of operating cycle. The amount required for these stages, stage wise investment, will be total amount of working capital of the organization. So that 30 days of working operating cycle, in that 30 days of working capital cycle, operating cycle, you need a cash for a day to day business, day to day transaction. So that is required, that can be identified through a operating cycle. And last is estimation of current assets components. Every components will be calculated in the this current asset component, estimation of current asset components. So you can see here the statement of working capital requirement, that is the pro forma of to solve the each component, to identify the cost of each component of current assets and as well as current liability also. Now look at carefully that current assets, the first you have to calculate the stock of raw material. It now here it will give you that for the month consumption, but it will depend that if in the numerical, the examiner, if give you that all the estimates in days, then you have to calculate in a days. If you it will give in a month, that then you have to calculate in a month. So stock is simple. You have to check the what is the raw material you have purchased, and you have to calculate it month wise. In the second step of the current asset is work in process. This working process is what? To identify the raw material, direct labor and overhead. What is the level of consumption of this raw material, direct labor and overheads in work in process level, that you have to identify in the months, right? This is one important point, is that in the work in process level, you have to identify the level of consumption of direct labor and direct overheads, because in finished goods also you have to calculate the direct labor, right? And working process is not a last step. After the working process step, you are going to consume the direct labor and overheads also. So that you have to check. Third step is stock of finished goods. That is also, you can take the total cost to identify the finished goods also. But if it will not give in problem, then you have to identify each component of raw material, direct labor and overheads. Then fourth is sundry debtors. Here also you can take a total cost or sales. That will be depend on the company to company, what amount they have considered as a bad debt. So here you can see that again you have to calculate raw material, direct labor and overheads. But you can if in the numericals, you will, if the examiner will give you the total cost or sales, you can take that amount directly. Then what are the advances, what are the cash in your bank or in hand, and any other current assets. These are the each and every component of current assets you have to calculate while estimating the working capital. And from this current assets, you have to minimize, you have to less the current liabilities. First is creditors. Now who are the creditors? Creditors, for those are the creditors from whom you have purchased the raw material. So obviously, what is the amount of raw material that you have to consider here. But one thing is different from identify the stock of raw material and creditors, that the duration of uh, raw material in your warehouse, it will be different. And the uh, whatever the time period will be given by the creditors, that will be different. The time period will be different in this calculation, right? But the amount of raw material will be the same. Second is lag in payment of expenses. Whatever in the arrears may be of electric bill, arrears of water bill, arrears of wages, arrears of salaries. These arrears of manufacturing expenses, these arrears will be considered as the current liabilities, and that you have to consider in this statement of working capital requirement, and any other liabilities you have to consider. So from this current assets minus current liabilities, you will get the working capital. And obviously there should be a provision for and margin of for contingencies. So that contingencies you have to consider. So what is what is the percentages? Maybe 10%, maybe 20%, that will be depend upon the company to company or the variability of the company. So there is how you can calculate the working capital requirement in every component of uh, current assets and current liabilities. I hope from this format you will understand the basic of calculation of uh, working capital requirement. Thank you.